Let's bring in David Semmens with Standard Chartered, the Standard Chartered Bank. He's on the U.S. watch for them. I want to play this Blanchflower piece, but I want you to think as we play it, David, here about the needed austerity sometime forever in the U.S. Earlier this morning, Margaret Brennan spoke to David Blanchflower of Dartmouth, former member of the Bank of England, about the Federal Reserve. Do they have their austerity policy just right, while the Europe is perhaps doing austerity wrong?
Cuts in public spending and raising taxes are actually completely wrong. We should be cutting taxes, particularly payroll taxes, and probably investing large amounts in the infrastructure, almost exactly the opposite to what all the European countries are doing. And actually, it is what the US is doing, and the US seems to be on the right path. Thank goodness for Janet Yellen and Ben Bernanke, who've got it right.
Blanchflower, they're all fired up, but of course he's on the side with the doves, and you think of the hawks like Plosser, et cetera. David Semmens, your take with Standard Chartered Bank of UK austerity, is it working out?
Yeah, I mean, the UK's been very strict with their austerity measures. Similarly, the US has actually been reversing their austerity measures. We're actually going to see tax cuts in the coming year, and we've seen more monetary stimulus from the US and the UK than we've seen from Europe. But
has it worked out? I mean, there's a real polarity there. It's like we got two test tubes going on within the crisis. How does an economist view the two test tubes? Are they discrete, or can you really combine them and compare and contrast?
I think it's more you try and make a judgment on where you would be had you not taken these measures. And people say, well, you know, the US is not in a particularly strong position now. But you think, well, if we hadn't lowered interest rates, where would we be in this position?
And now, folks, we go to the dreaded jargon. It's a counterfactual. This is economics. Neil Ferguson is very big on this. I liked how you said that. You don't know where you are. It's what if we hadn't done it? What if the UK hadn't done austerity?
Well, I think the UK would be in a significantly worse position. Now the pound might be a bit stronger because there would be less quantitative easing, but you would still be seeing particularly undesirable growth figures coming out of the UK.
That thud was me falling off the chair. David Semmens here, folks. Look at this. NFP, 300,000 in 2011, non-farm payrolls. And that's a John Snow number, harkening back to the struggles to create jobs in the Bush II administration. That's a big number.
Yeah, I mean, we're looking for the tax cuts that you're going to be seeing, especially within the business sector, to really encourage businesses to go out and hire more workers. Now you're looking for the full business expensing in 2011 to make businesses far more inclined to spend, and that will mean they need to hire more people. They're not going to buy more machinery and just leave it idle.
So we're December, we had 100-something, and we're going to get into this. You're talking about 400,000 per month somewhere out near the end of 11?
Yes, I mean, we're looking for it to gather pace. We are feeling relatively optimistic about 2011, especially when you compare it to 2012. And when you were talking about the JOLT survey before I came on, when you look at the JOLT survey, the demand is there, but unfortunately there's the skills mismatch, which unfortunately means that people aren't being hired at the moment.
I love that. Let's look at this, folks. Too much information goes right to what Michael McKee and David Semmens are talking about. Bodies disappear. There it is down there, David. Bodies disappear into the jobless ether. This is a flow chart. We showed it last week. LF flows to not in LF. That's very good. I don't know, Casey must have done that, or I have no clue what that means. Anyways, it's like the bodies that are unemployed, and they just disappear into the ether. They just fall off the chart. Can we pull those people back into the job economy?
Well, once you start seeing hiring, then you will get these people coming back into the economy. And unfortunately, that means that unemployment is unlikely to break below the 9% mark. If anything, if you start seeing the absolute level of employment rise, because there's more hiring, you could see it's still the percentage number rise simply because more people come back into the labour force, and that drives the number higher. Do
we get a 5% Byron Wien statistic here with your 300,000 job creation? Can we get out well past 4% real GDP?
We're looking for GDP in the first quarter to top out about 3.8, so we're still not looking for it to break the magic 4% number, unfortunately.
All right. Interesting. David Semmens, thank you so much. Standard Chartered Bank. We're going to